December 18th, 2023, micro NASDAQ futures, 1 minute chart. This is the pre-market from Sunday night to Monday open. It's all condensed, and I'm just showing you what I look at before the market opens. So I'm looking for gaps. So here, there's a gap here between these two candles where I'm flashing my cursor. I'm not going to zoom in. The script just shows me this blue wedge right here. Shows me the gap between the current candle and the previous candle. Just like up here where I'm flashing this orange wedge shows me that there's a gap between the previous candle and that current candle right there. So what I'm looking for is where gaps have not yet been filled. So here, where this cyan wedge is, there's a little gap right here. You can see that gap was filled right here, and then all the way up here, where I'm flashing my cursor at around 8:55, there's a gap there which gets filled by this wick. So really what I'm looking for is just any remaining gaps before the market opens. So here there's a gap that hasn't been filled, and there's a gap up here. So we got a gap around 8:27. We got a gap around 8:51 that hasn't been filled. So now I will zoom in and we'll get to market open. Zoom in a little bit more, make it a little easier to see this on your charts. So the first 1 minute candle on the open is a signal candle to go long. It's based upon my script. You can see that this first target here got filled immediately on the second candle. So that target here, this gap, this yellow line gap, is no longer valid. So we're going to remove that. You can also see that on this 1 minute candle and the next candle, there's a gap here. So this open of this is higher than the close of this. So the open of this candle is at 48.25, and the close of this candle is 48. So there's a 1 tick difference between these two candles. Very hard to see. That's why I have the script that displays the blue wedge. So in terms of thinking of a short, that's what I was thinking of for a short to come back down in here and fill this gap. I'll show you my trades later, but I really struggled with this short. I mean, this price just wasn't coming down very fast. And then you also have VWAP right here. That's this magenta pink colored line. I'm not a VWAP trader, but typically we do get a reaction around VWAP. So the other thing that I'll say is if you get a close above 60, which we got a close above 60 here, typically a close above 60 if the Nasdaq's not, or the Nasdaq, Dow, ES, even Russell, but specifically the Nasdaq and the Dow, if you get a close above the 60 price, doesn't matter what the thousands and hundred is. If you get a close above 60, you'll typically get a move to 20. You get a close above 20, you get a push to 40, and so on and so forth. If you get a close below 20, you'll get a move to 60, and then you get a move to 60, you'll touch 40, and then maybe you touch 20. So that's how you can also gauge whether you want to take bullish trades or bearish trades for the morning. Let me turn on, so I'm just going to document some waves here because I'm primarily focused on trading waves. I'm by no means an expert. So this is, we know that this is the low of the day, so right now, so I'll just put in a wave 1, and then wave 1 goes to a top, and that top, it's quite nasty, but it is right here, this candle body. And the reason I say this candle body is because this candle body opens at 69.25, and this opens at that's wrong. This closes at 65.25. So it opened here at the top and closed here. So this closes at 65.25. This particular candle here opens at 64.75 and closes at 64.25. So this candle body is underneath this candle body. So in order for waves to be created, you have to have candle body under candle body and candle body over candle body. So this is the pullback, and then we get a move up. And then what happens is you get this secondary move down, and you get candle body under previous wave. So this would actually be the pullback right here to this candle body, wave 2, and then we go up, duplicate. This is where wave 2 ends, because this candle body here, this doji red candle body, is above the previous wave 1 high candle body. I don't care about wicks and tails. All I measure is the bodies when I'm doing wave trading process. So then we get a pullback. So the perfect pullback is that the wave only comes back to the previous wave high and then bounces and goes up. This particular wave, wave 2, actually closes here on this candle below wave 2, invalidating this wave 2 beginning, giving credence to the fact that price will potentially come down and tag this gap here. And so that's exactly what happens. This wave 2 pulls all the way back here. Just put this here and begins a wave 3. I don't like to see like I said, I don't like to see price going below the previous wave in an uptrend, but that's part of every day's fake out. So within wave 3, you can see some bounces here. You see some wicks here. If you're kind of a tail and a wick trader, you see a reaction around VWAP here. We do get the signal candle again, and then we get candle body closing above the signal, and then we get candle body over. So this is a good place to go long. This particular wave 3 goes all the way up to here. Essentially this large red candle, and then we get candle body here underneath. Whether you're measuring this candle, or this candle body is underneath the bodies of all of these. So this is where wave 3 terminates. It pulls back a little bit further. Whoops, wrong click. Wave 3 pulls back into wave 4. It creates some poor structure in these 2-minute candles as it's coming down. Look left. What was consolidation? So what was resistance before, to an extent, kind of becomes support. It's not perfect by any means, but price does fill the gap here between these two candles and fills the gap here and puts in the tail and starts to go up again. So as soon as you get the signal and you get a close above the signal, this is your chance to either add to your position or go back long for your next target. So that is wave 4 beginning. Let's update this. Wave 4 goes up. It terminates here. This candle body, this doji candle body, is above the wave 3, and you get candle body under candle body here, indicating that this is the end of wave 4. We get a pullback. So at this point in time, this potentially looks like it's wave 5. However, it's a failure. And you'll see that as I scroll right, because price ends up closing below wave 5 and continues to go down. So it breaks wave 5, breaks wave 4. This is another one of these failed waves. How do you know it's going to fail? Well, frankly, you don't. I mean, potentially right here you have an indication. Right here, I'm going to draw a rectangle. That price is failing because you get consolidation here in relation to this candle at the bottom of this candle. In addition to that consolidation, this orange wedge is a gap between this candle body and this candle body. So where this closes and where this opens, there's a gap, at least one tick, and you get this, and so that's another signal that price is going to go down. How far? Well, you really got to look left and see where you might run into consolidation or you have poor structure. And here we have VWAP looking left, kind of price is bouncing off of this zone. You can almost connect 4 candles here. This one, this one, this one, and almost that one. So a lot of times you'll see where you can connect 4 candles. That's a place where price will reverse, and you can see this is poor structure here, and price retraces that poor structure. So this wave 5 is a failure. I'm going to edit this one, and we'll change it red for a failed wave. This wave 3, edit properties. It's also a failed wave. Okay, and then what we're looking for is candle bodies over this wave 4, or just a large wick. Doesn't even have to be large, just something over this wave 4 body to conclude wave 5. And right in here, scroll a little bit further to the right. This is wave 5. This is where, so I'm going to duplicate this. Wave 5 actually ultimately then starts down here and concludes right here on this particular candle. Make this a wave 5. How do we know that that's the end of wave 5? Because you get this candle body right here is underneath this candle body, so that concludes wave 5. When price was coming down, and it created a gap here, which you can see, which becomes a target for when price is going back up. You have a gap here between these two candle bodies. That gap does get retraced by this green candle, so this first gap gets filled by this green candle. Get a second gap right here that is not filled by any subsequent candles until price starts moving up in this wave here. So I'll show you my trades. Turn these on. Okay, so I'm going to talk about this zone. This zone was me trying to short back down to this gap, and I basically just got chopped up. It was pretty much break even, maybe down a few dollars, $5 plus commissions, so not a lot, but just a lot of chop with the commissions. Yeah, I did see this. I didn't go long at this point in time. Up in here, I'm trying in this section, this pullback, I'm trying to go long for a push into wave 5, and ultimately you can see that I get stopped out on all of this in this section. So this is trade 2. So at this particular point, I'm probably down about 150, so probably $100 plus 100 plus dollars plus commissions. And then this candle was a fake out for me. I got long 1, and I added here and here, thinking we're going to get the bounce. We're going to get the bounce. Got stopped out. And then I scroll a little bit to the right. Here, so I get back in on got a signal candle here. Price is closing above the signal candle. I got long 4 contracts on this candle. Price then gaps up over this candle. You barely see that little blue scion wedge back in there where my mouse pointer is. That's a gap. Add 1 on this. My first target is at this particular gap, so you can see that gap is, the close is 950.95.5. I had a limit order in to sell at 2.5, 1 tick below the gap. That gets filled. Price is going back up, and you can see I took off my remaining contracts. So that's how I traded today. Was it good? No, I got stopped out a lot of times. I finally got it right here, held to at least my first target, and started selling up into a wave 5 move. Yes, there are targets higher. because like I said, if you get a close above 60, you should push to 20. But ultimately, I didn't hang on to my inventory for that high because this created poor structure. There's consolidation here, but this created poor structure here, and there's a gap here and a gap here, and this is all poor structure. So I thought price might roll back over one more time. So I got out and turned what was a losing day into a profitable day, not by much. But it is a profitable day. The other way to help you understand where price might be going is if you go to the futures, pull up the, not the futures, pull up the options of the futures. This can, under reading the options chain can help you. So this is a NASDAQ futures. These are the options that expire today, 0 days to expiration. They expire today on Monday. And what I mean by looking at the futures, uh, to read the tea leaves, look at open interest only, and then volume. Open interest is the inventory that was carried over from the previous trading day, so from Friday. You had 283 contracts carried over at the 17,000 strike. You had 120 contracts carried over at the 950 strike, and you can already see prices up there right around 950 right now. It's flashing 950, so price has already tagged this. Potentially it goes higher today, not sure, but 950 was also a target of mine. I just didn't hold for that. And then you can see the other open interest, and this is all on the calls side. And then if you watch volume build, this will give you a little bit more indication that price will actually hit some of these targets. You can look at the put, you should look at the put side as well. So the put side really wasn't stacked with a lot of high open interest. You got a high open interest down here at 800, 750, and 700. So it doesn't mean price is going to go down there. If you're an options trader, you might look at this and say, hey, somebody's selling some big strangles, things like that. But each side of the strangle, or at least one side, may be tested during the day, if not both. So that's what should help you understand what some of the targets are, and hopefully help you hold some of your position to those higher targets. Thanks for watching. Have a great day. Merry Christmas. Bye.